And we continue our BlackBerry coverage right now. That company has reported lower than expected revenue and announced it's ending its internal hardware development. For reaction, we're joined by Santosh Rao. He's head of research at Manhattan Venture Partners, and he joins us from Manhattan. Santosh, thanks a great deal for joining us. The company says, and it's getting a lot of attention, it plans to end all internal hardware development. Is this the exit from the handset business that the market had been expecting?
Exactly. Good morning again. This is really, the internal development was costing them a lot of money, and they have outsourced that, which is what they were talking about if things didn't work out. These quarters' numbers pretty much show that there is no traction in their hardware business. And I think this was a nice, correct move, a move that the investors were expecting. And it was a good move. I mean, now the hardware will be developed by third-party people, third-party vendors. So they won't spend any internal money, any capital expenditures on this. So that's a big savings right there. And they can now focus on their core strength, which is their software business.
And what do you expect ahead? What will you be looking for in that software business, which you've just described as their core strength?
Well, I think what they're going to do is they have 2 or 3 areas in there, which is the enterprise, the messaging, the enterprise area, and then there's the messaging, which is and the security part. So I think these 3 areas is where they're focusing on. They will have all the applications in there, and at the end of the day, I think regulated industries, who are their biggest customers, value security and value all the enhancements that the BlackBerry gives them. So I think security is a big part of their business, and this company provides that, and they've been known to do that. So on that end, I think there is no problem. On the consumer end, I think that's where they were having a problem in terms of the hardware business, where consumers want applications and the features and all that, and the form factor, that did not click. So I think what they can do now is provide the back end of all the handsets. So I think they're good at that, and I think that's what they will do. They will develop the cross-platform alliances, work with the different vendors that they talked about, just kind of work closely with the third-party guys and develop those applications.
Now, they had an interesting debt refinance this summer, which really cleaned up their balance sheet. Do you think that provides them some flexibility to go out there and do some acquisitions to try and link all these companies, these areas together to really focus on the enterprise?
Exactly. It will. It was a good move on their part. They lowered their cost, and that should improve their cash flows position. I think that was just a strategic move. Interest rates are low, and they did the right thing. So I think at this point, I think they have the ammunition and the attention to focus on the software business. So it could be tuck-in acquisitions here and there, and just spending money on internal development of the software applications.
So for a few years as an investor, this has been a stock that's really been tough to read, and it's kind of been put in the bucket of an uninvestable security that you really don't know what's going on, so you can't trade it. Does this go further to make it so it's a company that you actually know what direction they're heading and puts it back on the investable horizon of a lot of people?
Absolutely. I think this is what people wanted. It was a show-me story all along, and it still is. I mean, at this point, I think they got the pieces in order now. They can now focus on this, and the market likes some kind of visibility into the future. And what they're telling them is now we are focusing on our core strength. This is where we're going. We're getting out of the losing business. We are on track to hit 30% growth for the software business, which is important. I think the market likes that, and the profitability. They will start getting treated like a software company. They will start getting the multiples of a software company. So I think the investors will like this, and you will see some upside to this stock from here.
So do you think that will also cause a bit of a short squeeze? This has been a company that has been one of the more heavily shorted stocks in the NASDAQ. Will this cause those shorts to cover?
Yes, it absolutely will. And you saw the pop this morning also in the pre-market. I think that's what's happening because it's been a very disappointing story all along. Every earnings was some excuse or the other, and the stock sold off. So I think what this will do is, I think, lower the losses and really stay focused and start getting the multiples of a software company with high margins, and in the growth areas of Internet of Things and all the other areas in the logistics business and all the other growth areas that I'm talking about. I think that's where this company will be focused, and they will deliver on that side. So I think the market will like this.
I can tell you, Santosh, that during the conference call, which is going on now, the company has disclosed that it sold 400,000 devices in the quarter. And of course, you could put that into context with us. At its peak, BlackBerry, I believe, was selling something in the order of 15 million devices per quarter. That's now shriveled to 400,000. Do I have those figures approximately correct?
Right. I mean, last quarter was 500,000, so it's been on a gradual decline, and that was the worst part about it. It was a slow bleed, and I think the company was smart to just throw in the towel and say, you know what, the smartphone train has left the station. Let's not crib about it. Let's move on and focus on the key strength that we have, which is their core software business.
And that number also, that 400,000 device number, much lower than the consensus figure of 461,000. I want to thank you, Santosh Rao, for giving us some valuable insight into these numbers. Thanks very much.
Thank you.
Santosh Rao, Head of Research at Manhattan Venture Partners from downtown New York.